Welcome back, everyone. Thank you for joining us. So let's begin with chapter 2. We won't take much long with chapter 2, just quick glance over it. Generally speaking, in the exam, students do not struggle with chapter 2 because the compliance function is pretty clear and to the point. And many of the students who take this exam either work in a financial institution or have some experience in finance. So they understand what is the financial function, what is the compliance function, and what is the responsibilities of the compliance function. And that's why whenever we are doing training for this exam, we don't spend much time on chapter 2. We spend a lot more time on chapter 1 because they almost have equal weightings, around 20 questions each of them. But chapter 1 is this chapter that students struggle with more than chapter 2. Chapter 2 is clearer and straight to the point. So we'll just go through the summarized slides, showing you where to concentrate, and we should be done with it. So international best practice, when we're talking about the compliance function, we are in this chapter, we are going to cover these points, these 7 points, starting with system controls and ending with regulations and regulatory implications. So let's start with the first one, systems and controls. But the compliance function is responsible to ensuring that the appropriate system controls have been put in place. Of course, with the risk team. The Basel Committee principles relating to compliance, they cover the board. The board is responsible to oversee the bank's compliance risk. What is the compliance risk? The compliance risk is the risk that you do not comply with the regulators' regulation, and as a result, you're either fined, jailed, loss of reputation. You lose either directly or indirectly. The board is also responsible to approve the policy, and that policy is assessed once a year. The creation of the policy is not done by the board. The board is there to approve it. Keep that in mind. The creation of the policy is usually done by the head of the compliance or by the risk and compliance committee. The board is only here to approve. Basel says that the senior management should ensure that there is effective management of compliance risk. We're talking about the chief risk officer, the chief compliance officer. Establish and communicate the compliance policy with the employees and the rest of the firm. They're responsible to establish a permanent and effective compliance function. It's one of the requirements of actually getting a license from the regulator is to have an effective and permanent compliance function. When we mean permanent, we mean not a temporary, because some of the employees you might get is temporary. You only work for the summer and bye-bye. So you can't say, okay, I will get a compliance manager for like 3 months and then you will go. No, you have to have a permanent compliance manager. And senior management will report to the board. And by senior management, we mean the CRO, the CMO, the CFO, the CEO, all of these C-suite. They report to the board annually on management of compliance risk. They have to. And quickly on material failures. So if nothing is wrong, we send an annual report. If something is wrong, we have to quickly report on these failures, especially if these failures are material. We have breached one of the regulator's main requirements. The board of directors needs to know immediately, not at the end of the year when we send our report. The compliance team needs to have adequate resources, and by adequate resources, we mean enough employees that are working there, a good office space, for example, enough authority to work with. The staff should have the necessary qualifications and experience, personal qualities, sound understanding of the compliance laws. Basically, employ someone who has done this before, someone who's experienced and would have the knowledge. Why would you risk being fined by the regulator? I mean, compliance manual and policies. The purpose and scope of the compliance, just to go through this quickly, in case you're taking the exam. Just something to remember, the difference between a manual, a policy, a procedure. So if you look at the company is usually divided into this pyramid. This is not in the book. I'm just trying to explain something. So you've got at a strategic level, which is the higher management, and you've got at a tactical level, which is the mid management, and you've got the operational level, which are the rest of the employees. So the compliance manual is basically issued at the strategic level, senior management. And because it's at the strategic level, it is not very detailed. It just gives a general high-level overview, generic, wide-range framework of compliance. This manual is then taken by the tactical level, which is the mid-managers, and they create what we call policies, compliance policies, created by managers. These managers would then take it, and the rest of the employees will have to follow what we call the compliance procedures, how to do things, the actual processes. Just know the difference between these, please. So the scope of the compliance manual sets out standards to be followed by all employees, links to the corporate governance manual, because it only works with the corporate governance manual, and it includes legal and regulatory obligations of employees and agents, what we are expected to know as employees and agents. Now, it doesn't include everything. It is not detailed and granular. It is, remember for the exam, it is wide-ranged and a general manual. The formal status of the compliance function should be clearly communicated to the rest of the employees. It's very important that the rest of the teams know who the compliance function is. You will be surprised. I have taught in banks across the GCC employees, and I've asked them, who is your CRO? Who is your head of compliance? Who is compliance? They don't know. The status of the compliance function should be announced both internally to the employees and externally to the rest of the market, especially if this is a listed company. The role of the compliance team, their responsibilities, their powers, and I'm pretty sure they will have enough powers. So if a compliance manager comes to you and says, hey, show me this document, hey, answer this question, you can't say, you don't have that power on me. He does have that power over you. And he has a power that extends all the way up. Relationship with other businesses, internal and external. So how does the compliance team work with the business internally? What are the responsibilities and the roles and the rights of each of these towards each other? And how the compliance team deals externally? Do they speak with other compliance teams in other companies? Do they exchange information and data? Do they attend some of these external meetings with the central bank? Their relationship with the regulator, and so forth. The key purposes of the compliance function: assurance to senior management and board of compliance and board of directors, and senior management and board on compliance. Well, basically, we just want the board of directors and the CEO to sleep at night. So how can they sleep soundly? They can sleep soundly by we, as a compliance manager and compliance team, giving them assurance that everything is okay. Advise the board on compliance responsibilities. Yeah. Identify and record good and bad practice, provide analysis and early warnings on regulatory change. They should be the receptors of any changes. Usually, whenever these regulatory changes happen, they don't happen immediately. The regulator consults with the banks and the brokerages and the financial institutions on possible changes through working papers and through drafts long before these changes happen. So compliance managers will have information about what's going to change and when it's going to change before it actually changes. At least a good compliance team. Build a relationship with the regulators. At least we're all humans, right? Respond and coordinate responses to proposed legislation and regulation. So whenever there's a change in a certain requirements, for example, you are now required to take more margins. You're now required to have higher capital. Obviously, it's not the compliance manager who's going to keep the capital. It's the compliance manager's responsibility to tell who is responsible for the capital to keep more capital. It is the compliance manager's responsibility to respond to these changes to the regulation and inform the team who are responsible for that on the changes that they need to make. What makes an effective compliance function effective? Seen as an advantage to the business? Yes. The next time, I mean, very few people do believe in that. They believe that the risk compliance and internal audit are here to restrict us, to stop us. They are the red tape. They are very difficult people. Compliance and risk are actually, they make you money as much as the sales team makes you money. They prevent you from being fined by the regulator, and trust me, the fines from the regulator, you need hundreds of clients to recoup that money. So by making sure that you comply with the regulator, they are saving you hundreds of thousands of dollars, which are equivalent to new sales. And the compliance and the risk team make sure that the rules and the procedures of the company, of the bank, of the brokerage are there to protect you as an employee from going to jail, from paying a fine. So they are an advantage to the business, and you should speak with them regularly because they know stuff you don't. The compliance team is both an advisor and a watchdog, basically looking over the company, what's going on, and if you can approach them for advice and speak with them. And they should be valued by staff. Are they? They should be. But are they really? That's the problem. I mean, you will see companies where the risk, compliance, and internal audit are appreciated more are companies that are more successful, are companies that are lesser fined by the regulator. Activities, what does the compliance function do? They provide advice. They provide guidance and education. In small companies, the compliance manager might actually do training inside the company. But in larger companies, I don't think they have the ability to do that. If the company is very, very big, they will have to bring in someone from outside. Identify, measure, assess, monitor, test, and report. Testing can be control. These are usually a cycle which starts at identifying a risk, a compliance risk. For example, we're not adhering to this section of the regulator's code. And after that, you measure, which basically gives it a number. And then you assess. So we are noticing that because we are not adhering to this, there's a chance that we might lose, let's say, $500 in fines. Assess it. Is this worth it or no? Worth it or no? That's an assessment. And then you monitor. You put certain controls in place. Are these working or no? Testing. If they're not, you report to the board of directors. So this is a cycle when it comes to identifying, measuring, assessing, monitoring, testing and controlling, and reporting of compliance risk. Statutory, which means regulatory, responsibilities and liaison. They should be constantly in touch with the regulator and liaise on the new requirements. For example, if there's any AML risks in the company, I'm pretty sure they will have a constant relationship and discussion with the regulator. Compliance programs are the programs that, a program is a set of little projects, is a set of little steps, a set of planned activities, usually planned by the compliance team, and they will be usually risk-based. So a compliance team may say, okay, fine, we need this compliance program for this risk. So if you have two risks in this company, you have a risk of let's say you have a risk of money laundering, and you have a risk of, I don't know what other crime, insider trading. And you have noticed that when it comes to money laundering, the risk is probably 20% chance, and it happens once every 10 years. And the risk of insider trading has an 80% chance, and it happens 6 times every 10 years. Obviously, using the risk-based approach, as a compliance team, you need to ensure that you concentrate on insider trading more than you do on money laundering. So, the effective compliance programs, a structured approach to compliance programs. So we start with a stage. Stage 1, how to create a compliance program. Identify potential adverse events. So what could cause your company not to comply? Examples, it can be anything. Payments not made in time. Suspicions not reported. Remember, not reporting a suspicion is considered as an offense. Failure to complete reconciliation. Imagine you've got your clearinghouse and then you've got your client's internal records, and you look at both, and then you have to manually check the transactions on both, and you don't reconcile on time. You've lost stocks, you've lost bonds, you've lost cash. Some regulators, most regulators, force you to pay the difference from your own pocket. Late execution of client instructions. The client wants to buy at 5 dirhams. So you are late. The price is now 6. You can't tell the client, oh, I'm sorry, the price went up. I can't execute this for you anymore. Mishandling of complaints. There is a certain number of days you have to respond after a complaint. And if you don't, you have to raise it. Usually the regulators give you steps to do that. And if you don't, the client can go directly to the regulator. Unsuitable advice is another problem that might cause issues, compliance issues for you as a company. You gave a client, and this happens a lot in most countries, you missell a product to a client. You tell the client to buy a product which is not suitable for them. So the second stage is you score the events. So basically you score them based on two things, based on impact, based on three things, sorry, exposure and probability. So if we have, so for example, let's say suitability, but this one as a risk has a very low risk, one, because we rarely give advice. But when we look at insider trading, this one has a score of 4 when it comes to impact because it happens a lot. So the cost, suitability cost, if we provide the wrong advice, we get fined a little amount. If we are caught off insider trading, we get fined a lot. Exposure, same thing. How many times, how often the activity gives rise to an event? Suitability, we rarely give advice. So it happens probably once every year. But insider trading, there's a big chance it happens. Where do you think we're going to concentrate more on? Insider trading. What are the chances of this happening? Suitability advice, risk or fines have a, let's say, 20% chance. Insider trading has a 60% chance. Questions in the exam. What are the 3 criteria you look at whenever you are scoring the events or the risks? The 3 things are impact, exposure, and probability. Probability / likelihood. That's the other word you'll see in the exam. Now, the third stage, you put everything in Excel, which reflect other weightings, anxiety weighting, increasing the risk of the event based on industry or regulatory concerns or a thematic review. So in addition to what you have just scored in the previous page, which was the impact of that event happening and the exposure of that event and the probability, the chances of that event happening, in addition to that, are there going to be any regulatory concerns? Is there going to be any reviews such as the RDR, the retail distribution review, in case that event happens? That's going to add to your anxiety, your nervousness, how nervous you become. Perspective means future. Looking into the future. Consider risk from a perspective of what is expected to happen or proposed. The thing about most of compliance is based on history. It's historical, but sometimes it pays to anticipate what's going to happen. Don't wait for the risk to happen before you start taking action. Try to predict. You can also look at the days since something that has been last tested. When was the last time you checked the elevators? You notice that every elevator, every fire extinguisher has a time when it was last tested. So when was the last time tested? If it was like 3 years ago, obviously something's not right. Elevators are every 6 months. So are fire extinguishers. So the last time the company or the compliance or the risk team tested a certain risk and its controls tells you how risky that is. If it has been a very, very long time, then that risk should have a priority for you. If it was just done recently, then that's fine.